So, uh, what does Amazon, Google, Tesla, Apple, and Walmart all have in common? If you look at the topic of this video, you already know we're going to be talking about something that's been on the stroll of social media, news headlines, all that, stock splits. Stock splits really got popular during the pandemic of 2020, the split of 2020, which was Tesla and Apple and some others. But now we're starting to see stock splits becoming a little bit of a topic when it comes to investing. So in this video, we're going to be talking about not only the stock splits that are coming up, which are Nvidia and Chipotle pending, but taking a step back to look at the history of stock splits or the recent history of stock splits, determining if you should invest, how you should invest, and how you should do your homework over the hype that you're going to see no matter after these stock splits happen. If you're coming back to this video later on down the line, that you understand the basics of what stock splits are, how they fit within your budget. There's ways to do that. And then how to do your fundamental analysis or do your research on if this stock split fits for you, your budget, or your risk tolerance, your financial goals. And you're making sound decisions. My bad. My name is Nadia. I'm a financial planner as well as an educator. Help you understand their wallet while to build their wealth. So in this video, we're going to go a little bit more in depth beyond what's the stroll around stock splits. I have a feeling though, when I am filming this, that we're going to be seeing a lot more of IPOs. We're going to be seeing more stock splits. We're going to be seeing more things happen, as well as mergers and acquisitions. I made that prediction back in 2023, and it seems like things are coming to be. The reason why I'm saying this is that oftentimes back historically that we used to be able to take the economy and see the stock market and there'll be mirror images. But right now we're seeing the economy pretty much go shit due to stagflation, recession, depression, low growth within the job market. Things are going in disarray and inflation is seeming like it's here to stay. But on the other hand, things are popping when it comes to the stock market, even though I feel at the end of 2024, dang, I made it rhyme, that we could see a little bit of rumble and tumbling within the stock market. I'm not here to scare you, just go ahead and give you a strategy on how to handle this. So we're going to be talking a little bit more in depth about what stock splits are, what we've seen in the past, and how you make the decision of if you want to smash a pass when buying these stock. So pretty much, what is a stock split? A stock split is pretty much, people usually either use the analogy around either a piece of pizza or a cookie. We're going to stick with cookies because I just had some cookies from Whole Foods. Talking about Amazon, right? So imagine you have this big ass cookie. You know the big cookies you get from the mall. Them big you can get from the mall. Shout out to the crumble you can get from the mall. So that is your cookie. That is your one share. A stock split is when a company is going to take that one share that you have and split it up. So you have the cookie is you get more smaller pieces of that cookie, but yet you're going to have more of the cookie in the sense of all. But the thing with stock splits is though the volume of shares you have is going to go up, but the value of the actual stock price is going to go down. So like what we saw, who was that? Right now, Chipotle is around $3,000 a share. So whenever they do have a stock split that is pending, that they could notice that the stock price is going to drop. But the amount of shares that you're going to have is going to pop. Does that make sense? But some people are calling for this little variation or this season of stock splits to be kind of a pump and dump theory that most companies are doing, because oftentimes companies make maneuvers like this to make it accessible for more people to invest, but also making it accessible for them to accumulate more money, because it's going to pump up people to buy. But on the other hand, we've seen this historically happen, and we're going to talk about this a little bit later in the video, where they anticipated we make this stock split to happen. It's going to pop up the stock, kind of what we saw in 2020. But in the last couple of stock splits, it hasn't popped as quick. So the reason why I wanted to start off talking about what is a stock split is because I want you to understand the basics why you build your portfolio. So when a company doesn't necessarily want to magically create more value, they just divide up the existing ownership of or the stock that's available or the cookie into smaller pieces or shares. So the reason why they're doing that, like I said, is to make it more accessible per se, the cost value for the affordable, not necessarily for the affluent. But the price of like I said, the price of the share price is going to go down, but the volume of shares are pretty much going to go increase in a funky little variation of it. Stock split is pretty much a way for you to have more for what you already have in store. And even if you don't have the 3,000, what if you don't have the 1,000, even if you don't have whatever a stock price is or the stock that's splitting before it splits, no matter what side of the coin that you do the flip on or the split on, you're still going to be in alignment to get more of a value down the line in case the company does see their share prices pop. The caveat around this though, what if the companies doesn't pop, the share price doesn't pop as quick as we all initiated or thought it would be? That's the question. And there's a question that you have to ask yourself and as investors, like, okay, if I buy, if I am able to find, let me take a step back. Do not use your light bill money. Do not use any other money. Do not pull for your 401k or your IRA to make this parlay to buy any stock split. The thing that I have been driving home is for you to save for opportunity. So if you're saving for $10 here, $5 here, $50 there, or whatever, so you can build up the cash value that you have within your IRA, that you have within your brokerage, then whenever opportunities come like this, you're not really a dishevel or messing up your budget because you already built the cash and liquidity to handle this opportunity. But we're going to talk about another part a lot of people don't really talk about when it comes to stock splits down the line. So the types of stock splits that you can actually see often goes into the variation of a sort. Most of the time you hear either for one share of stock that you have or something, it's going to be split into 2, it's going to be split into 3, it's going to be split into 4, or it's going to be split into 5. Oftentimes we see the 1, 3, and 5 stock splits happen or variation happening. So if you have one, it's going to either be split into 2, 3, or 5. But lately we've been seeing the 1 turn into 10, or as in the case of, who is this? Chipotle, potentially 50. I'm intrigued to see that. So whenever you hear as a stock split, whatever the amount of share that you have initially before the stock split happens, let me go ahead and say this now. If you notice a stock split is going to happen in a couple of weeks, go ahead and at least a week before the stock split happens and go ahead and get in on the deal. So you'll oftentimes hear that for every one share that you have, it's going to become this after the split happens, after the flip of the switch happens. And then afterwards, you're going to see the price go down. We saw this with Walmart recently, that the price has gone down, but the amount of shares that you're going to see is going to go up. But the thing that I want to call out is I want you to make sure over time that you look at the realized gains, the unrealized gains, and then see how things grow over time to see if you want to still hold it or you want to unload it whenever you do. It all goes back to your risk tolerance as well as your financial goals and your budget. So, should you participate in a stock split or not? Let's talk about it. There's a very big question around, okay, Nadia, this is a stock split happening. Should I buy or should I just let things fly? Depends on you, boo. No matter, like I said, no matter which side of the coin that you catch this stock split on, it's not a bad thing. Most people wait till after the stock split if they're more focused on the value to fit within their budget. But oftentimes people will go and buy beforehand if their main focus is on the volume of shares that they have within that company. So another couple of questions I want to ask you is this: what you should ask yourself before ever determining either a stock buy, for splits or just for regular stocks, ETFs, or index funds. Is this company profitable? Meaning going back to look to say, hey, has this company been profitable over time? How has their operations look? How has their last couple of earnings look? And how does all that information fit within my financial objectives? And then you'll understand. My whole theory is this: I have a watch list of companies that I'm interested in buying, companies, or have another one for companies that I currently hold. So I'm not watching my portfolio if it goes up and down as I have the flows. Because whenever you are looking at companies to buy, if you already had this company on your watch list and you see that they're having a stock split, you already know historically they have performed well. They match within your risk tolerance. They match within their goals. They're a company that you can hold for a long time. Because what we're seeing with these stock splits, I'm getting tongue tied, is that most of the time it's going to take a while for that pop to happen. So are you worried? Are you more concerned? We're not going to say worried. Are you focused on the value of the shares, meaning how much is it going to fit within your budget, or are you focused on the volume of shares you're going to have? So think about this: even if you don't get in on the stock split, that on the other side, when the light flips, that even if the price goes down, you're still able to buy in volume, depending on your budget, your goals, and how like a timeline you have of sorts. So I want you to focus on the fundamentals, make sure it aligns to your goals, and then determine how it flows within your portfolio. So at the top of this video, I list a couple of stock splits that we've seen in the pocket over the last, let's just get a pandemic span, okay? The great split of 2020 is when we seen Apple as well as Tesla do their split. But recently we saw Amazon, we saw Google, we saw Walmart, okay, Walmart do their split. But comparison to the great split of 2020 and compare of right now, the pop that we seen in 2020 is not the pop that we're seeing right now with recent stock splits. Amazon, Google, as well as Walmart have not seen their stock revert back up, at least grown, like we saw back in 2020 due to the economy, the shifts, ebbs and flows, all that good shit. So the thing of it is they didn't necessarily pop or after. Most companies' intentions when they do a stock split is for them to make it affordable, but also, of course, to make the dough out of it all. Like I used to say, when you want a dough, when companies need dough, call it IPO. When companies need stacks, they go ahead and split the stocks. Anyway, so companies' long-term performance matters more so than the hype around the split. So my whole thing is that you measure against the risk tolerance. Can you handle if the stock doesn't pop initially, or is it stags a little bit? But you know historically through your research that this company is sound to be around at least 100 years or something. It's going to be fine because you look back and you looked at historical data saying how's the company been profitable? How has the company managed money? What's the company's leadership look like? All these things are key things that when you're doing your homework around the hype of a stock split or any kind of stock that you're doing that before, or how I say research before you reach for your wallet. So measuring against your risk tolerance as well as your financial goals will lock in if this is going to be a key move for you to purchase a stock after the stock split. Because even if you see a company going public IPO, there is usually a 25% chance that it's going to drop couple of weeks after the IPO. So let's get into these current stock splits that we've been seeing on the docket or the social media lane. So you've been seeing, I've tweeted about Nvidia, but also another one that was in the news recently was Chipotle. They recently both announced their stock splits, and both companies have been doing well in the past. So let's look at the fundamentals. And when it comes to Nvidia, here's what's looking at their recent earnings. And then when you look at Chipotle, here's their recent earnings as well. But while they have been doing well within their respective lanes, I'm not telling you to buy or not to buy, but just understanding where they are when it comes to the stock price currently as I am recording. For the stock split with Nvidia, they are planning to do their stock split around June 6th, which if you have one share of Nvidia, that is going to pop to 10 and the price is going to drop to whichever. I'm going to place it right here. Chipotle is planning their stock split around June 18th, which if you have one share of Chipotle is pending shareholder vote is going to pop to 50. Honestly, truly, due to looking at stock splits of the past, I don't know if it's going to drop and give it 50, but it might be. I think they are going to target a higher variation of a stock split than what we've seen historically. Like I told you, mostly one share to either 3, or 5. We've seen it now more of a 10 split of it all. So that 50, I don't know. But like I said, I want you to do your research on these companies. Would you rather, like you do any other investment, don't get hyped up in the split frenzy? Because honestly, like I talked about over LinkedIn, when we see these splits happen, they kind of do a pump and dump aspect of it. And the pump and dump psychology, I have this theory around portfolio psychology, meaning how mindset of the stock market or investing could have you, if you're triggered, could have you buying stock that you probably wouldn't usually done, buying into the hype, not doing your homework. But when it comes to stock splits like this, that we have seen a pump kind of a psychology, meaning companies would do this split to pop their stock. But if it doesn't pop naturally, or it doesn't go up like we've seen in a great split of 2020, that the stock price will stay stagnant, like we see with Walmart, like we see with Google and such, stay stagnant. So whatever the variation that will happen with Nvidia, well, with Chipotle, we already know Nvidia is going to do their 10 for 1. That is still going to be the same. So oftentimes when people talk about stock splits, people automatically go to the part that I need to have a full share of Chipotle, I need to have a full share of Nvidia, and you're looking at your budget like, I can't handle it. And the thing that I've been talking about since my days of public, which I'm still there, is that don't necessarily look like you have to have the 1,000, you need to have the 3,000, have a single Chipotle, you need to have the 300, you need to have the 500, whatever that stock price is, but prior to it going into a split, that you can look into fractional shares. So think of it, a lot of brokerages like Public, like Stash, even Charles Schwab are offering where you can buy pieces of a share. So you don't necessarily have to have the full share. With fractional shares, you can buy $10, $5, $20, even as low as $1. I think, Cash App will let you get to $1 variation. That other hood. So the thing of it is that fractional shares allows you to buy pieces of a stock or ETF or index fund for a certain price that will fit with your budget. You can buy bit by bit until you determine if you want to buy all of it or you just want to stay with that fractional and move around to other things. That's the reason why I love fractional shares, because that's how I initially brought my first full share of Amazon. Was I was saying, this is what Amazon stock price is, this is what my budget is looking like. I know I want to buy Amazon. This is what I can set to automate every pay period to buy bit by bit until I had all of Amazon. And when Amazon split, I had a good bit more of it. So when it comes to investing in a company splitting stocks, I want you to still consider if you want to do fractional shares for this. Why? It's because even if you see Chipotle is going around 3,000 a share right now, that you noticing that you don't have 3,000. I said, don't go cashing in your IRA, missing your light bill to leverage any kind of stock split. This is why it's critical for you to move over, automate money over into your brokerage account, IRA or whatever. So whenever you do have buying opportunity, you're able to buy for it. So I don't want you, when a company splits, I don't want you splitting through your bills and robbing Peter to pay Paul, because Peter and Paul don't even either or have it all. So with fractional shares, when it comes to a stock split, this is still allowing you to get something from it. The reason why is because even if you have $20, $50, $100, or $5 worth of any stock that splits, whenever it splits and the value goes down, your volume of shares is still going to go up. So it's still good if it fits, if you figure out the variation. Okay, this is the company that I like. This is the budget that I have. I'm going to buy this amount of stock or this amount of fractional shares. And then by the time the stock split happens, even though the price is going to drop, my volume is going to pop. That's fine. Invest what you are comfortable in. That's the thing that I have been driving since I have started this thing, is don't go over abundant of what you can't afford. So only do what you can afford to spend and you can afford to lose, because stock prices go up and down. And I don't know where this whole theory that everybody thinks that the stock price is going to keep going up. This is not to the moon variation of it all. So keep that in mind. Invest only what you're comfortable in. And even if you're not able to get in on the split, that if you are doing a fractional share, good. If you are still able to purchase after the price goes down, good. It's no right or wrong way to play or flip of a stock split that we could see. So keep that in mind. So stock splits can be exciting, but remember, they do not change the company's value. Focus on the company's health. You remember I talked about at the beginning of this video, is the company profitable? How they handle operations? What's their leadership looking like? What has been so whenever a company has a meeting and you vote as a shareholder, you should vote. I'm saying you should vote, right? Okay. That you can still, whenever you get that proxy, was kind of like a meeting agenda to say, here's what we're meeting about, and you vote on things, you get an idea, an understanding of this is what the company is intending to do down the line. And you as a shareholder, you get to vote. But also, even if you're not a shareholder, those things are available to you online as public record. So you're able to look at the company's health. You're able to go look, see how the earnings did the last couple of years, or couple of quarters. You're able to determine if these going to fit within your long-term goals. Do your homework versus listening to the hype of social media. I remember when Tesla and Apple did their great split of 2020, and I did get in on it, but the social media streets was wild with the content, with the you should do this and do that. Like I said, while I got in on it, I did my research because this is what I'm supposed to do. But also, I told people to focus on your funds and focus on the flip that you're going to do. And how long are you going to hold that? No matter what side of the coin that you do the stock split, so maybe you're like, okay, I don't want to do nothing right now. I just want to see what it's going to do. Stop trying to time the market and put time in the market. Don't I sound like somebody that has a birthday of August the 30th? And he's the color of my shirt. Yes, Warren Buffett has said that. Is that people are so keen with trying to time the market, meaning when's the right best time to buy. Just buy when you can buy, and buy with your own budget and supply that you can. That is one thing I'm going to drive the thing. So even if you were to say I have $20 worth of nvidia or $20 worth of chipotle, and then when the split happens and the price goes down, and it still fits within your budget, you want to buy. It's no bad season on buy. Well, on when you should buy stock. That's all I'm gonna say. So always do your research before reaching for your budget. Now, it used to be what I close or say in my disclaimers on social media, especially Instagram, is that research before you reach for your wallet. The whole saying is that you should measure twice, cut, or 3 times, cut once. That's the thing that you need to keep in mind. Is that even if but the whole thing is this. I want to drive this home, and we're gonna go ahead and close this. Is that even if you feel that you messed up, you still can actually reconfigure. You take the L's, meaning you take the lessons of it all, and you leverage it for building your portfolio. Nobody gets it overnight. Even I had my snafus, and you already know, if you know my story, you've been following my channel, that I have been the person that has actually drained their 401k to make sure they have money at bay, but I had to build it back, which I have done. So that's the thing, is that don't allow any L's that you figure out that you've taken when it comes to meme stock or anything like that, and use the insights that you get from it as leverage for later. Always, please only invest what you can afford. If you're new to investing, don't hesitate to ask me any comments and questions in the comments below. Don't forget to like, comment, and subscribe. And remember, there are plenty of resources. I have a blog. I've been talking about it on Instagram. I'm talking about stock market investing or investing in general. But I also have a course that talks about how you can invest with what you have. The scale is in the start, meaning you can start with 5, and it's how you build up to build your portfolio. So you can check that out over on my website. So don't forget to like, comment, and subscribe. Let me know in the comment section, what are your plans? Are you going to get in on this stock split, or how you've been feeling about stock splits in general? And then I'm going to take another question, is how are you feeling about investing right now? Let me know so I can address it in another video, because it's a group chat about your personal economy. And that's it.